this is 7, 8, 9 years into my journey, I kind of started talking to other people and networking with some local people here. Maybe just the beginning of me kind of asking for help or building a team. And I found a guy that was in the multifamily, and I thought maybe I should flip houses and build wealth. And owning multifamily is basically flipping a house every month, except you get to keep the asset. So he had a small multifamily and he was looking to sell to trade up to a larger one.
Welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appelman. Today we're joined with Thomas. He's a seasoned real estate investor and fund manager with 20 plus years experience scaling multifamily assets, boosting NOI, and delivering strong returns alongside top tier operators nationwide. Thomas, we appreciate you coming on the show today. If you could let the listeners know a little bit more about yourself.
Well, thanks a lot for Josh for having me. I've listened to several of your episodes, so it's really cool to be on this side of it. Yeah, like you said, my name's Tom. I've been doing real estate for a little over 20 years now. Spent a long time just in the trenches, doing it on my own. Started off with single families, like a lot of people do, just scraping, clawing and scratching every way I could just to own property, one house at a time. My vision was always multifamily. That's what I always wanted to get into. It took me a lot longer to do that than I would have liked, but I started in 2006 in Toledo, Ohio. 2008 and 2009, everyone knows what happened then with the GFC. And at that time, I didn't really care about how cheap the properties were or the market values falling. It was just really tough to, everyone talks about that, but no one talks about the credit crunch. It was almost impossible to buy anything, But somehow I managed to acquire enough properties to where in 2015, I was able to take a lot of those single families and sell them and build up enough capital for my first down payment. And once I got into multifamily, man, that was kind of, I was off to the races from that point. I've been doing multifamily and some other alternative investing since 2015. But it took me 9 years to kind of get started, I always tell people.
That's a cool journey too, because you started from zero. Everyone starts with zero real estate, but sometimes people can start at -0 because you've got to learn the path. Plus, you need to get the capital to even get the first property, and then just stuck in the weeds until you finally get to the next level. And it's almost, if you go back and think about it, and if there's an outsider looking in at what we put ourselves through to purchase the next property, it's It is definitely brain damage, and it's like, why would you do that? But it's just I think it's the hunt of the next deal, getting it under contract, and then getting it closed, and then under ownership is it's huge. And no one hears about the struggles of getting the equity in order to close, whether you're bringing on partners or you're raising capital or you're doing it on your own. It all is a struggle. It's really different forms and fashions. Raising capital, it's how big's your reach, and then closing on your own, how deep are your pockets. If you're closing with partners, finding the partners and the trust. So let's go all the way back to your first deal, because that's important for listeners to know how you found it, how you closed it, and then we'll get into your first multifamily purchase.
Yeah, it was probably around 2005. My dad, he had retired. He had a heart attack on a golf course, and I remember and he was kind of just decided, whatever I have. And I remember being in the hospital with him, and he retired, walked away, and a couple weeks later they gave him a telescope. And I always tell that story because it just infuriated me, that after 35 years of working in a power plant, they give you a telescope, and that's kind of what I decided I needed to find a new way. So it took me about a year to get my credit built up, and I looked all over. And to be honest, I kind of just bought anything I could. I had a specific area in my hometown that I was familiar with, and found a deal at the time. It was $35,000, but for me at that time, it might as well have been $3.5 million. And I was able to close on that property and get it rehabbed and rented out. It covered the mortgage, and but I kind of set myself up before I bought my first one to where I was able to buy 4 in the first year. And so then I started getting experience on how to manage properties, manage tenants. And the second year I bought 4 more. So within 2 years, I had 8 properties, and I felt like I had just like a thriving business, but that's kind of where I got started. The first 8, they were difficult, but they weren't as hard as the next 8 after the 2008, 2009, when banks just closed their doors, I mean, not for everyone, but for people like me, they did.
And that is, I'm glad you mentioned, you kept it, you purchased it, you renovated it, you kept it. There's such a huge difference between someone who flips properties, purchase them and put them out to sell them, and then you've got the operator, someone who not only takes it from not safe, functional, and able to be lived in and habitable, to where it's habitable, plus it's an operating, it's a part of your business. And that's a huge difference between someone who flips properties and operates the business, operating properties. And you're right. Once you go into 0 to 8, and then you've got a huge disruption into the credit world. Now your business is stagnant. Values have probably dropped. Tell us about that. How do you get through it, and how do you prevail?
Yeah, my plan was to try to acquire multifamily, but looking back on it, you can start off right away in multifamily with partners, loan guarantors, raising capital. But I didn't understand or even realize that path back then. I didn't think it was possible to walk into a bank and get $1 million loan for an apartment. So I thought I had to build up a big track record and assets under management and experience. So that was a big blow to me when the banks kind of shut down as far as just conventional regular loans. So I did everything you've ever read about, and everything that I wouldn't recommend now. Like, I'm never going to write a book and a how-to and advise someone to follow my path. I used a lot of hard money. I used a lot of crowdfunding platforms that were kind of real popular back then. Like, I don't know if you remember, like Lending Club and Prosper.
Oh yeah.
I would do crazy stuff like that with 20% interest rates, just to acquire property. I knew that the rents would cover those high interest rate loans, and I would the principal pay down was very quick on those loans. But I did a lot of seller financing, and oh man, if you talk about brain damage, it was. I don't think I could ever do that again. Like, starting today, I would. I don't know. I don't think I would do it. I would just work at Target or something.
But it's being young and hungry, and you
Yeah.
don't know what you don't know what you don't know. You don't know what bad looks like. So it's just get the next one closed. It covers the debt, and those are high risk. But you're underwriting them. You know what you can do. You trust yourself. That's the other piece, is that when you're doing it on your own, 100% on your own, and I mean from deal sourcing to renovating, hiring the crews, doing the renovation budget, making sure renovations are getting done. You're actually there doing it, making sure oversight. You're taking out so much risk, and you don't.
Yeah.
The risk is almost all gone because you're so deep in the weeds. And if you trust yourself, you know what you're capable of. You've de-risked it to where you can go after those high risk loans. It's not. I mean, sometimes you got to do what you need to do to get the thing closed, and then just go as fast and as hard as you can to get the thing refinanced.
Yeah, to me, the risk, I never had any money anyway. So to me, I wasn't bringing in outside capital. To me, there was no risk. I mean, there was, but in my head at that time, at that age, I didn't, the risk never really entered my mind, because it was all my own time, my own money. But one thing that, even though the property values were falling like crazy, the rents never did. I never had to lower rents because of it. So yeah, there was a de-risk and a level of a big cushion, knowing what I could rent the property for. I just had to keep them occupied, keep them in good shape. And what I learned really quickly too was screening tenants. Then just aside from renting to anyone, screening tenants and do a good job at that helped make my life a lot easier. So I'm glad I learned it then before I ever got into multifamily. That proved real beneficial for me going as I got into multifamily.
Well, and I think that everyone, if you want to be an investor in real estate, I think that I think it should be a requirement that you have to be an operator first and foremost, because you have a different level of understanding on what good deals, what a bad deal looks like versus a good deal. and then how the property should operate after you could hire third-party property management in front of you, but if you're an operator, you have an understanding that someone versus someone who's never operated, just like you, and going in and taking the properties and getting them to where they're rented, they stay rented, they pay for themselves. Tell us about your first multifamily purchase, how you found it, financed it, and all the good stuff.
Yeah, so I finally, this is 7, 8, 9 years into my journey. I kind of started talking to other people and networking with some local people here. Maybe just the beginning of me kind of asking for help or building a team. And I found a guy that was in the multifamily, and I thought maybe I should flip houses and build wealth. And owning multifamily is basically flipping a house every month, except you get to keep the asset. So he had a small multifamily and he was looking to sell to trade up to a larger one. And so I right away I said, I'll buy it. I had no idea how I was going to be able to do it. So we signed a purchase agreement, and he was happy, I was happy. The down payment, obviously, that was a huge issue though, because I had none of it. So I didn't tell him that, but I took another kind of goofy story I wouldn't recommend, but I took about 10 of my properties and I needed to kind of fire sale them. I spent about a week trying to offload them on myself, and I eventually ended up going to an auction company, and I gave them all the properties, and I just held an auction and just sold them. Looking back on it, those 10 properties were probably worth more cumulatively than the multifamily property. But I knew the direction I wanted to go, and I wanted to get my first multifamily property under my belt. So I ended up having a fire sale and sold 10 properties, 10 single families to get the down payment, which I barely got, by the way. But I was able to close on my first multifamily, and it was kind of a light value add. Everything's a value add, I guess. Technically, you're always trying to add value, but the rents were way under market, and I was able to do a good job with that one and really increase the value. And that's when I realized firsthand the power of multifamily, when you are able to maximize the operation of the multifamily, increase rents, decrease expenses, whatever it is, you really actually add value by increasing NOI. A single family is worth what it's worth, vacant or occupied. So that was pretty powerful. First deal for me.
Where did you go to get the lending on the multifamily, and then you got your down payment? Did you get renovation funds in the loan, or how did that work out?
No, I kind of bootstrapped all that. It was a brick property, so older roofs. I knew those were kind of the major capex item that I was going to have to address. HVACs and unit turns were I just kind of was able to cash flow. But I went to a local bank, and they actually just did a portfolio loan for me. But part of the approval process for that was I owned a bunch of single families, and I had 9 years of operational experience. And I also had a W-2 job at the time, which, they weren't used to people walking in there with W-2 income, to kind of help support the loan. So it wasn't a big, I didn't need any kind of loan sponsor. It was a smaller deal, but I was able to get it on my own with just a local bank that was, understood that property values were down at the time, and I had enough operational experience to close it.
I think that's like the most important part of any real estate investor's journey is one, holding the properties, and then the smaller deals along the way. The smaller deals that build up to a bigger portfolio, but it also builds your experience up. The adage is, don't bite off something bigger than your head. And if you're constantly building up these small base hits, these little wins, then it turns into a bigger portfolio. Now you're operating this thing, and then you go out and you get a 100-unit apartment building under contract. Well, you've got all this operating experience along the way, so it doesn't seem so big. But 100 units out of the gates, no experience, no portfolio. I mean, it's just, that's where it becomes unrealistic. Everybody wants to jump to the 100 unit and not go through the trenches to get there.
Yeah, I don't know how it is for you, but when I see, I underwrite deals all day, and I actually enjoy doing it. Maybe that's kind of abnormal, but one thing I see a lot is people, I think, especially people who probably never operated before, I think they grossly underestimate what it takes and what it costs to operate a property. So I don't know. I see that a lot, but maybe it comes from not actually operating them on their own before.
Yeah, well, and I'm underwriting properties just like you are, especially right now is a really good time. There's a lot of deals coming online, but there's a lot of deals that are still being pushed out to a pro forma price. So
I know.
we're sending LOIs on what the in-place NOI says it's worth and what it should. And we'll put add backs in on things that we know that those expenses will go away at the day it sells. But this is what it's worth. This is how much the thing should trade for today. And even if I was going out there and buying let's just call it an oil changing business, I wouldn't purchase that thing more than what it's worth because the oil changing shop is doing better down the road, and that's what I should be doing.
I know. Yeah, that's a big deal right now. You know, they look at the and brokers are, man, God bless the brokers. I have a lot of great relationships with brokers, but you know, they always paint this picture, which that's their job. I guess they do a good job of it, and the photographers do a great job too. If you ever bought a property without looking at it, I don't recommend that. But yeah, these performers are just make it look so good. It's like even if I agree with that performer that I can achieve those rents, I need to be the one that gets compensated for it.
100%.
If I'm going to do the work to get it there. And maybe because of the 2021, 2022 market, there's still a lot of a disconnect, I think, with some brokers. Because in those days, you could sell it for what it's going to be worth.
This was a hot topic last week. I had a back and forth with the broker. He's it's 1970s vintage property, and I think the other group overpaid for it. Well, I know they did, but they're wanting to sell it at 110,000 per unit. You have to stick 15,000 per unit into it to get it to where it's updated. It's not 1960s anymore. And I was telling him, I said, "Who's the buyer of this thing at call it 150,000 per unit when I'm done with it? If I were to buy it at your basis and put in the cash that I need for renovations, plus make some kind of return, who's the buyer then?"
Yeah, that's a thing that I don't think a lot of people look at too. You look at you know, why a property's selling and maybe why they bought to begin with, but who are you going to sell it to? And a lot of times, you know, every time you're buying or selling a 100-unit or even an 8-unit multifamily, you're selling it to an investor. So I think you have to bake in my opinion, you have to bake in a little meat on the bone for the next guy.
That's exactly right. Even if it's 10 units left to be renovated, you're still saying, hey, look, you've got a $200 delta on in place versus market on these. There's value add there. There's still left. But buying it at a basis to where you can truly put the right amount of capital into it, plus have a reversion at year 2. You're going through 2 leases. No matter what, the first lease is still dealing with the nonsense if you're turning the complex around. Second lease is where you're getting to pro forma. You've got 2 years of time baked in, plus the I call it brain damage, going with all the vendors, materials, all the things to get it to where it needs to be at. You should be able to pay yourself in 2 years. You're taking the long game, and they're wanting they're wanting you to give that up on the buy. So there's a lot of that still out there, and I think a lot of groups got caught up in that motion here on this past. Well, I think we're almost to the end of the cycle, but that's why it's a great time to still underwrite and find deals and just put your LOIs out and make relationships.
Yeah, I think a lot of groups at those 3% and 4% interest rate times, you know, we're betting on not having to go the full length of the term, the loan term, and now they are, you know, and that's a dangerous game to play. You know, I think you have to. You know, I always look at property like if I have to sell this tomorrow, you know, can I sell it? Is there a buyer for it? Or if I have to hold this the rest of my life, am I okay with that as well? You know, and that's probably a little bit too conservative. Maybe it's kind of stalled my growth, but it sure helps me sleep at night.
Yeah, and that's the other. You've got a ton of runway left. So slow growth is good growth. There's not. At one time, I wanted 2,000 units tomorrow, and that's fine in a long run, long game. 2,000 units is kind of small when you get to certain, I think certain levels, but it's still huge to me right now. But that's still 2,000 problems that I need to manage and make sure that are operating optimal. So what's the rush?
Yeah, and if you start raising capital or bringing in other investors, you know, it's, you know, you have different master to serve, you know, and underwriting a property that you're gonna, if you're a mom and pop and you're gonna operate it yourself, or even if you bring in third party, you don't have LPs and pref rates to account for, the price changes a lot. You can't pay the same amount you can if you're bringing in outside capital.
Yeah, and to me, a pref, I syndicated a deal a couple years ago, and it's about the 8% pref. But now looking back, a pref is a loan from an investor, and they shouldn't carry the same. They should either have a pref and no equity, or equity and no pref. I think and that's just learning. That's me, but everyone's different. You might have different things set up for your different deals too that incentivize investors.
Yeah, I mean, for the property itself has to kind of speak for itself. The location, the business plan, and then the team that's operating it. I think those are the most important things. But I do a 7 or 8 pref, with equity still, and maybe that's why it's been a lot more difficult for me to find properties over the last few years. I've actually kind of we were talking about before the show. I've transitioned a little bit of a pivot in my business. Our team has invested in and looked in some other alternative investments like real estate debt income and just general income funds. And I spent 4 years vetting operators. That's what I love to do. I like to fly out, meet them in person, have lunch, and find out who are the top tier guys operating, with, number one, the most integrity, but also the ones that perform. Everyone performs. I can perform on a spreadsheet. It's very easy to manipulate some numbers, but I am kind of shifting a little bit. I'll never leave multifamily, but some of these income funds, only have 12-month lockups. So 10 or 12% interest. So you're way outperforming the market with less volatility, but it allows a guy like me to have the flexibility to where that money is not locked up for 5 years. And if I do see something with, that I can still access that money and shift it towards multifamily when I see the right opportunity.
So on the, is it a equity fund or just debt, or both?
Just debt.
Just debt. So you've got first lien position.
Mm-hmm.
Okay,
yeah.
Got it. But that also gives a up and coming operator a different angle where they can take down a property that other banks might not want any part in, and they can come to you and quick close.
Yeah. There's a big gap in the market with banking, especially since 2008, where banks have a lot of regulatory, restrictions, and there's certain things they just can't or won't lend on. So, private lending is very powerful, and I think it'll become more and more mainstream as we move on through these next few years.
Yeah.
As an alternative to traditional banking.
Yeah. No, I totally agree. It's there's less hoops to jump through. There's less reporting, less of everything. It's still strict. You still can't. It's not the Wild West, but at the same time, you being the operator, you see things that the banks wouldn't see, and then you see maybe character or different things in an operator that the banks can't underwrite. So it gives opportunity.
Yeah, and in business, if you're a small business and you're looking to get some working capital, or you're looking to expand your business, and you go through the SBA, you're talking 6-9 months, and unbelievable amount of hoops to jump through. If you're looking at like private land or vacant land, I mean, the velocity of money becomes very important for those types of people, and banks just can't. There is no velocity with money when you're talking to a regular institution. The
SBA says small business administration. Like, you think that they're after small business, helping them out, but they have their interest rates are up there too, and their underwriting constraints. I mean, to me, small business, you're creating employment, you're doing the things, and the SBA, they'll give loans where others might not, but they'll also, I mean, there's definitely a lot of hoops.
Yeah, it's a great organization. It's a good thing they exist, and they do a lot of good things. But yeah, it's an unbelievable process for people to go through. It's almost too encumbersome, as is a lot of the government agencies.
We purchased, we went through the construction loan. SBA as a 504. Actually, it was done through a 7A, and then the interest rate started hiking. I mean, we ended up selling it in 2023 because the interest rates hiked up so fast. But I mean, regardless, small business, the bank should be protecting the small business, not putting them in a position where they have to sell because of interest rates.
So. Yeah, I feel like a lot of banks, they should look at their business or their real estate as a partner, and I don't know if that's necessarily true all the time.
Yeah, I only say that because there should be some more protection, and then the interest rates are, in my opinion, higher. But man, but it's another learning experience. It's one of those things where you don't use SBA for your real estate neither. But it was construction to perm, and it was what Huntington offered, and it's what we went with. And but that's part of the learning lessons. But go ahead. Sorry.
Real estate. I just eat, sleep, and breathe it. It's so interesting. But I ultimately, with investors, I just want to provide the safest return. And the 12-month lockup is one of the things that's appealing to a lot of people, especially a lot of LPs who got burned maybe in the last cycle. To have their money held up for 5 or 10 years with operators that maybe aren't communicating very well, or the reporting. So over the last few years, I've definitely focused more on operator selection and meeting and vetting these operators to see who the best in class are. But always until the day I die, we'll be looking through multifamily opportunities.
Well, and it's just fun. It's fun trying to find the next deal, and you finally find something and getting under contract and just going through the motions. Tell us about a big win that you've had, and then we'll get into some learning lessons that you've had along the way too.
Well, one of the big wins I had, it was a 78 unit apartment complex that was owned. They're all like 4-unit buildings and 1 6-unit building, all owned separately. A couple people owned 2 of them, and I went in, and I don't like to buy like in a situation like that where you have to kind of create an HOA of owners. It's just an unnecessary challenge. But this property I really loved, and I ended up buying 5 of the 4-unit buildings, and over time was able to acquire enough of them to where I got everyone together and consolidated. This building was a 1967 construction, but beautiful, in really good shape. And I was able to consolidate it all into one management structure, one reporting, to where I presented it as just one property, and I sold it to a big time player for way more than we would have got individually as owners selling these little quads. Nice. So that was kind of like
were they all on the same street?
Yeah.
Oh, nice. That's the entire neighborhood then.
Yeah, it was his own cul-de-sac.
That's very cool.
With a couple little cul-de-sacs off the main cul-de-sac, but it was kind of like a challenge. It's nothing I look to do or seek out, but it was kind of a unique situation since you asked the question of a big win. I look back on that like, man, why was I so motivated to do that? It was definitely a harder path than just buying existing multifamily, but looking back on it, it was real cool, and I'm kind of proud of that one.
We get tunnel vision for sure. Just you see something and that's it.
Yeah. Because the first 4-unit I bought, it was a very good price. I just kind of like couldn't help myself, a little bit of a deal junkie, And then once I had the 2 or 3 of the 4-unit places, then the vision started kind of really expanding. I would have loved to own it all myself, but that just kind of wasn't the play there. It was 2022. It was at the peak of the market, and the price that we got for the property, I wouldn't have expected to get that for, I don't know, 5, 6 years at least.
I wonder do you ever look back on your deals and see how they played out?
Oh yeah. All the time. I even look back at some of the single families that I sold for, $50,000, and maybe I made a little bit, and I see them now like on the market for $129 or something, and $159, and it's like, man, But yeah, you try not to do that. You try to always look forward.
What would be some learning lessons you could give to beginning real estate investors?
Well, the biggest lesson, based on my experience, is to ask for help sooner. When I started 05, 06, YouTube and podcasts, they weren't a big deal back then. I got all my information at the library, reading books, and you couldn't just email the authors, But there's a lot of people locally that want to do the same thing that you want to do, and it doesn't even have to be locally. There's the internet, and there's a whole world of real estate investors just love to share and talk about it. So I would just say, making mistakes on your own is very valuable, but learn from other people and ask for help a lot sooner. I don't know why it took me so long to do that and to branch out and to network with other like-minded people and share experiences. Strategic partnerships right now are a huge thing for me. I'm in Ohio. I love operating properties that I can, walk to and drive to. I love the Texas market, but it's hard for me to get there to manage them. So find some strategic partners and grow. I think growing together as a group, I wish I'd have done that a lot sooner.
Celebrate the wins and grow together. That's huge, because you can divide and conquer and get there sooner, or take the slow, lonely path forward and get there regardless.
Yeah, I mean, there's a lot of people I know here locally and that are kind of have the keep it small, keep it all mentality, and that's their prerogative. There's nothing wrong with that, but I like doing business with people I enjoy hanging out with, talking to, going to have a beer and watching the U.S. win the gold.
Yeah, that's it. That's it. So, Tom, if somebody wants to reach out to you, get a hold of you, possibly invest with you alongside operators that you select, how can they reach out and get a hold of you?
I'm most active on LinkedIn. You can find me on LinkedIn, Thomas St. John, or just email me, tom@northcorpcapital.com. You can go to my website or just email me directly, and it'll be me, the one answering.
Cool. Awesome. Definitely appreciate your time, your insights. We will talk soon. Thank you.
All right. Thank you, Josh. Right. Pleasure to be here.
Thanks. Bye.
Bye.